Oh, hold on a second. I got an error going on here. All right, something's going on with my recording, so you guys are just going to have to back it up here.
Got you covered.
All right. Good morning, everyone, and welcome to the Quantum Leap morning homework session for Tuesday, October the 8th, 2013. For those that are visiting us from Twitter, Quantum Leap is a self-organized learning environment. We have a private Skype chat room. You won't be able to see that this morning because it won't be up on my screen. But if you're interested in checking out, you will need a Skype account. It's free, the Skype account, and only takes a minute to open. And if you want to come and check us out, you can send me a contact request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. Or you can contact me through my email, dm@m4connects.com. Or you can give me a telephone call at 519-250-5530. And wouldn't you know, I've got all kinds of problems this morning. Now my mouse stopped working. Okay, so let me just switch. I'm going to have to pull my other mouse out of my other computer here for a second. Just switch over, and then I'll get back some batteries. You know, when it goes bad, it really goes bad. All right, so that works. So each morning, we come together, we do a homework session, go over the market, take a look at where we are within the context of the market, and this is a routine that we do. If you're watching on YouTube after the fact, we do start with the very basic key numbers and work our way through some basic trend charts, and then we get into the more deeper analysis, so you might want to skip ahead a little bit. But we don't stop doing that because it creates a routine, puts us into a mode for starting to trade the market. But before we start, we have to get the disclaimer out of the way. This information is for the purpose of educating members who want to expand their knowledge of the business of trading. It's not for trading or investment advice. Only you are responsible for the trades or investment decisions you make. Trading futures, any instrument involves the risk of loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades you see in here are for education purposes. Please trade your own plan. Do your own due diligence. All right, so let's get right to the numbers and get those out of the way. So, of course, nothing changes on the yearly. Our year high is still up there at 1726.75, put in the Globex. The RTH high is 1723.75. We're nowhere near our lows. Our month opened at 78.50. We have a high of 92.25 and a low of 63.25. And we went down and tested the 63 area again yesterday, or I should say in Globex. Our month open last month, 40.25. The high was the all-time high, the year high, 1726.75. The low was 30.75, and we closed at 78.75, right in this, what I'm starting to call a FUBAR zone. And we'll take a look at that on the composite chart when we get there. Our week opened on Sunday in the Globex at 1676.75. We have a week high. I don't know why that is not in there. Hold on a second. Our week high is 79.50. And our week low is 1666.50. Actually, we have a new week low that we just put in the Globex down at 62.75. This is a dynamic sheet. Our previous week open 16.75, previous high 16.92.25, previous low 16.63.25. So we do have a lower low, and our previous week close 16.82. We're trading below that. Nothing really changes in the quarterly, so we'll just go right to the Globex. or the intraday I should say. Yesterday in the Globex we opened at 1676.75. We had a Globex high of 78.25, and we had a Globex low of 66.50, which is right above that significant CLVN in my line in the sand at 65.75. We opened the RTH at 1669, just outside of the prior day balance, or just inside the prior. No, outside of the prior day balance. So we had an open auction out of range. We broke the IB to the high side and to the low side, so we had a neutral day. Our initial opening swing, 70.25 high, 67.25 low, for a 3-point opening swing, showing us that we had potential for a rotational day. Our initial balance high, 78.50, initial balance low, 67.25 for 11.25 point initial balance. Another clue that we were going to have a rotational day. It did look like it was going to set up for a trend day at first because we didn't get a close below the VWAP, but we did rotate off of that 79.50 area. Our 12:30 number, 75.50. Our RTH high, which was where we rotated off, 79.50. Our RTH low, 67, and we closed at 68 on the RTH, and our VPOC, 1676.50. We had a 12.5 point RTH range, 13 in the full session and 11.75 in the Globex. Our full session high put in the RTH, 1679.50. Our full session low put in the Globex, 1666.50. And our 20-day ATRs are running, just under 13.25, just over 15 for the full session, and just over 8.25 for the Globex. Our Globex opened last night, 1667. European cash close, which is the 10:30 number. All numbers in here are Central Time, 1675. Our value area high, 1678. Value area low, 1672 for a 6-point value area. And we made and broke the IB to the high side at 932, so we broke it inside of the pocket. We run a time study on our IB breaks. Our ETH high, extended session high, 69. Extended session low, 67.25, and our settlement price was 67.50 for a 1.75 point extended session, which is just over our 20-day ATRs for the extended session. And we had 1.3 in the RTH and 1.5 in the full session for volume. Going over to the daily report, we're just about, rotating and bouncing around in this area above 65.75. So none of the numbers really change on the CLVNs and CHVNs. Two LVNs you want to keep your eye on, 74 and 69.75. We'll look at Y in just a couple of minutes. Microcomposite VPOC above is the naked one is 1697. 76.50 and 97, and then below us in my key target below, which is that 1647 microcomposite VPOC. Looking at the naked crosses is a study that I've been running for a couple years now, and it involves the 9 EMA crossing over the 20 SMA and price action moving away from it dramatically and leaving it unauctioned or untested, and the market has a very high probability of coming back and testing these numbers. We track them on the 5, the 15, and the 30-minute for intraday purposes because we're looking for clusters in confluence with other numbers. So we're looking for them to rotate. We didn't take out any yesterday. We did take out some from the Globex, but we added 83, 80.25, 76, and 73.25. And we have a new naked VPOC at 1676.50. And then looking at the news today, we really don't have any big news. Of course, the headline news is what it's all about right now, whether or not the government can come to an agreement of some sort with the shutdown and the debt ceiling. But we do have 9 o'clock IBD, tip economic optimism, and that's it. Each day in Quantum Leap we put out, and this homework sheet is put together in order to put out what we call our Quantum Leap QLTP. And it's basically a ladder above the previous day close and a ladder below the previous day close with all of the numbers listed that we watch based on the different methodologies. Everything from open, high, low, close, Pearson pivots, support and resistance lines, composite high volume nodes, LVNs, low volume nodes, microcomposite VPOCs, naked VPOCs, naked crosses, Elliott wave, Fibonacci, and it's put into this ladder all on one sheet with a little bit of a work area and the news for the day, and this gives our members the ability to print this out so that they can watch where other traders might activate trades and be aware of where we've got confluence between different methodologies. So that's why we do our homework sheet. Next thing we do is we go through our macro to the micro. I always like to know where we are within the trend from the macro to the micro. So we start with basic. Oh, come on. What is that one? Sorry. We start with the basic, trends. So on the monthly, we've got good slope on the 9 and the 20. Prices paralleling the 9 nicely. Trend is very much intact on the monthly, and we're trading in the middle distribution right now of last month. Going over to the weekly. The weekly gave us our first clue that weakness was coming into the marketplace a couple weeks ago, where we had the first close on the weekly below the 20 SMA. It was the first one we've had all year, but since then we had Fed news that popped us up. We've now come back down and we're trading below the 9 EMA and in between the 20 SMA, and we've lost slope and we're consolidating in this area on the daily. And we have a possible head and shoulder pattern setting up. On the daily, the story's a little bit different. We've rolled over. We're trading below the 9 and the 20. We've got a cross of the 9 over the 20. We came up and, almost took out that cross. Pretty much, came close enough for me to consider it a closed naked cross. We've come down. We've got another naked cross below us down here at that 1653 area that I've got my eye on. That will take us down to test the lower line of the downward sloping fork. The upward sloping modified shift fork that we'll look at in a minute. But clearly we've lost our upward momentum right now, and we are seeing some weakness in the daily. And we're getting some separation of the 9 and the 20. Not so much slope yet, but we are trading below the 9. Going over to the geometric chart, this is the long-term fork that we've been watching for many months. We added this modified shift fork a couple weeks ago. We are trading below the center line and coming down to test the lower line. And that would bring us down to that 1656 area. Today, if we came down and tested it today, of course, we've got the opposing downward fork that we're coming off of the upper line and coming down to test its center line as well. We went beyond the energy point that we were watching at 53, 54 area, but we still do have two energy points, one above us at 1710, which I think would be in danger if we get any news of a government agreement in the next couple days. And of course we've got this one further out in time at 1683, 85, and the one up here at 1778, 79 area. That is where I'm looking at a possible blow-off top and upward target right now. Going over to the intraday, don't forget we still have a valid head and shoulder pattern that is still in the process of playing out. Left shoulder, head, right shoulder, neckline was in around that 1687 area, and we still have not come and broke above the right shoulder, so this pattern remains in effect, and its measured move is down to that 1647 microcomposite VPOC. But on the 4 hour, we are getting some slope and separation. We did create a bit of a tech gap overnight when we went down and hit that 62.75. I did take the short there from the break of the 65.75 CLVN, but I only got funded. Then they came up and took me out at 65.50 for a small little profit. But they had created this tech gap. They came up and closed the tech gap, and we're currently trying to break back above the 9 EMA on the 4 hour. Going down to the 30-minute, we've come back up and we've consolidated, and we're trading above the 9 and the 20, and in the last couple hours we've created some slope and separation to the upside, but we did come down in the last half hour and test this area again, so kind of not really telling us what kind of direction we're going to get during the course of the day yet. Looking over at the composite, well, my line in the sand, even though we've come down and broke it a couple times now, we broke it on this day right here where we went down right to the 63.75 and closed out that naked close that we had and closed the gap, and then launched back from there. 65.75 is the other side of balance around this area, which you would think with the amount of trading that we've done in this area that we would get much more maturity in terms of fair value, where the fair value is. But the weird thing about this is we're not determining the fair value here. It's becoming more blunt, because these areas just keep swapping back and forth. We've got originally we started in this area with 75, 78.50, and 80 and a quarter. Now we've got 75, we've got 76.50, we've got 79 with that 78.50 just below it, and we've got 80 and a quarter. So it's really not giving us any clear indication, and when we get back up into this area like we did yesterday afternoon, it's hard to take a trade, because where are you gonna lean against? There's 4 areas of undetermined fair value there, and it's gonna play ping pong back and forth like it did until it finally broke in the afternoon and came down to test the other side of balance. Didn't quite get down there, but this is ugliness to me, and this is what I would call a FUBAR zone. So if we get up here again today, it's going to be hard to trade. As long as we're above 65 coming into it, I'm looking for a rotation back towards this magnet area, this zone here, specifically this 1675, which was the former microcomposite VPOC, but also, it is the composite VPOC, the annual VPOC, or in layman's term, the most traded price in 2013 is 1675, which was up until yesterday up here at the 1680 and a quarter. So I mean, we've got a fight for that designation between these other 2 points in between at 79 and 76.50. So just be careful up here, because it's going to be really hard to trade this, especially with the headline news that we've got. The other side of that balance above, I'm going to be using this 82 and a quarter because of the fact that it is the value area high of the microcomposite here. Value area low is 69.50, but my line in the sand and where I'll be trading from is this 65.75 again, and if they come down and find more buyers, and I'll buy it back up towards this area of undetermined value. But if we break through, I'll be selling it to get into the 63.75. Test this this 60.50, and if we can get through the 60.50, I think we'll finally get our move down into that 53.54 area, testing the upper value areas of a couple of these microcomposites that we were watching when we were trading down here, but the big target below, again, is the 1647 microcomposite VPOC. You got 1647, you've got 1648.50, and you got 1649.50, all right there as predetermined areas of acceptance. And then below that, we get into this chop zone down here with 44.38.50, and then the bigger one below, which is going to be the 1631, which is basically where we came down, found buyers, and launched from. It was most accepted price before we came up, found acceptance in the prior area, and then launched from there. So again, 47 and 31 are the big numbers below, with that 53 and 60 as your areas that you want to keep an eye on. If we get above here and we move up through 82, I'd be looking for a move back up into that 84.75 area with a test to the other side of balance at the 87.50, but the one I'll be watching more than 87.50 is the 89.25, and that's because it's the microcomposite value area low. That's around this larger or more important naked microcomposite VPOC at 97. And if we get above that, test to the other side of balance at the centennial number at 1700 and 1701 CLVN, and above that, I think we'd go and take out that 1718.25, but more importantly, go out and test the year high in the RTH at 1723.75, but the more important number would be that 1726.75, which is the all-time high put in the Globex. All right, so let's take a look at our overnight and move our numbers over. So we had a pretty balanced profile other than that spike down to that 62.75. We came up and found balance in around 68, and that 68 is also that CHVN that we've got right here, that 68.75 area. So we found some balance around there, above 60, more importantly above the 65.75. But our overnight low is 62.75. Our overnight high is up at 71.50. Now we're still trading close to that, so we could put in a higher overnight before the open. But currently right now it is 71.50, and our VPOC, which I don't think is going to change, would be 68. So if we open up in this area where we're trading right now, we're going to be trading in the lower distribution from yesterday. We've got the overnight high, which is closer than the overnight low, just based on proximity. I think the 96% rule of taking out the overnight high or overnight low, is likely to be the overnight high. We've got the value area just above that at 72, but I would look for a possible move to come down here, take out this naked cross at 68.25, test the range low at 67, have the buyers come in, close out the gap that we had. The gap close is going to be 68, and then find buyers, rotate up, and take out the the 71.50 overnight high. Test the value area of 72. If we get inside of the value area, I would look for 73.25 naked VPOC, naked cross, and the midpoint from yesterday. You've got the LVN there at 74, just above, and then of course then you're getting into the the bigger distribution zone from yesterday with a naked cross at 76 and the naked VPOC at 76.50 with the value area high up here at 78. range high 79. The big number above, you've got that, now if you get up into this upper distribution area, you're going to be into this, area of undetermined, fair value on the composite, and I'm expecting more chop around here. But you do have 79.50, which is, just above that CHVN, and the 80.25, which would, take us for a break outside of this range and likely go up and take out this naked VPOC at 82.75. So my trade areas for today is going to be the range, between the range high and that 80.25, with a break above that to go take out the 82.75. You've got a naked close at 16.84, and then that's also near that 84.75 CHVN. Range high from Friday at 86, and then you've got two naked closes at 89.25 and 92.50, and I think we come up and we get it up into this upper distribution around that 97 and possibly go up to 97. Whether we hit that today is, I think, going to be dependent on a lot of news or news coming in. My other trade areas that I'll be looking to do business, obviously, is going to be the range low at 67 for a breakout to go and test that 65.75 CLVN. That will be another area that I will look to trade as well at 65.75 area for a break below that, and a move to take out the overnight high and go down and test that 63 area and possibly get us a move down to those more important numbers. And then I'll be watching the value area here, but more importantly, this 74. Because the 74 is, to me, a significant, C or LVN from yesterday. But I'm going to be very cautious, in this whole area from 70, from 71 through up to, the 80.25, and I may not take a trade because it's hard, unless I get a good setup against something intraday, it's pretty hard to, take a look at, or, find a trade in this area. It's ugliness. And there's no edge really to lean against. Taking a look at the Keltner channel with the Renko, center line is a test of 67, so that's in line with our range low for the day. So if we break below the Keltner center line, we're breaking out of the prior day range and look for a move down to that 61, which would give us a move to take out the overnight low. If we stay above the Keltner center line, you've got the upper Keltner at 74.25, and that's that 74.25. And if we come up here, we get a Keltner walk the line up to 76.50, and possibly up to the value area high at 78. So that's what I'm looking at for the ES. Take a quick look at gold. Not the gold chart I want. So we're still trading inside of this distribution zone and microcomposite VPOC with 1317. This is a good example, if you remember, that 1317 was a significant CLVN, and as we battle this area, we have price rejection turning into long-term price rejection, turning into shorter-term price acceptance as they battle that zone. And this is a good example of that shift from long-term price acceptance to short-term long-term price rejection into short-term price acceptance. But we're currently trading above it at the CHVN. The upper value area is 1327.20. The lower is 1299.60. Really, the key level down here is that 1300 and the 1299. If we get below that, then I'd be looking for a move down to that 1284 again. If we stay above this 1304 and 1300 and the 1299.60 value area low, then I'm expecting more chop in here with a move up to this 1327 and the other side of balance at 1337.10. 25 and possibly come up and test this 4110, and the target above being the value area high from the prior microcomposite that we broke down out of up there at the 1350 area, 1351.70. Above that, then I'm looking for that move that we've been waiting for up into the 1363.66 area, but the key number above is still that 1386, 1388 area. So that's what I'm looking at. Howard, over to you.
Thank you, Doug. So just taking a quick peek at the weekly chart, we see that since we had our high that broke above this 20-year fork that we've been following, rejected, formed a shooting star, had a bearish engulfing following week. The week after that, we confirmed the bearish engulfing and actually had a gap down and finished higher for the week, which is why this candle is hollow. But we tested the weekly 9 EMA and rejected. This week we're retesting this 9 EMA so far. We're just in the second day of the week, so just need to let it play out for the remainder of the week. Possible that we could be contained within this 9 EMA here and this 20 SMA below. So that's a couple of areas to look out for. So the weekly 20 SMA right now is in the 1657 area. So now let's go ahead and take a look at the daily. And we can see, we had the initial move down. We did have one candle that broke back above the 9. The following day we broke back below the 9, had the cross of the 9 below the 20. And for the last few days we've been testing the 9 and rejecting. We're now actually below the 50 SMA. And the 9 is coming down to possibly test the 50 here if we stay in this area or lower. So we do have resistance with the 9, which is currently at 1678 area. So looking at market breadth, let's start with the market sectors. With the down day we had yesterday, it looks like we had broad acceptance by the sectors. It doesn't look like there are any sectors that were higher. The top sectors look like they actually turned lower the strongest, and all the other sectors were lower to just a little bit under flat. Need to get used to this new format that TOS put on its charts here. So this is the sectors. So let's not show that one. Let's look at advanced decline. Whoops. I say I'm getting used to this. I don't like it. See if I did this right. Okay, it looks like it worked out okay. Alright, so looking at our advanced declines, we still continue to push lower on our 10-day average advanced declines. The NYSE is in blue, the NASDAQ in red. Both are below the 50% level where advanced declines would be equal. On up-down volume, on the update we had on the 4th, The NASDAQ managed to get back above the break even, so there's more net up volume in the NASDAQ. NYSE is still below, so more net down volume than up volume. So we can see that, you know, the trend in these indicators are still lower, and they made the turn about the same time as price did, whereas on the last two major turns, these indicators made the turn prior to price. Really don't like this new setup here. Looking at Dow Transports versus Industrials. I did that right. Okay, that looks like it came out okay. They're still pretty much moving in sync with each other. So nothing really to note there. And with that, Doug, that's pretty much all I've got. Got just over 8 minutes to open.
Thank you, Howard. I want to thank the visitors that we had in from Twitter and StockTwits. This will conclude our morning market analysis and trade plan setup for Tuesday, October the 7th or 8th, 2013. As always, trade well, trade safe, and we will catch you on the flip side. Have a good day, everyone. Level 2 and Level 3s, I'll open up the next room in just a minute. Have a good day, everyone.